Most traditional investing advice recommends diversifying across multiple sectors and asset types. This strategy is designed to limit risk and ensure that a single underperforming investment does not significantly harm the overall portfolio. Financial planners have emphasized this principle for decades. However, Etienne Breton, a 47-year-old investor from Canada, decided to go in the exact opposite direction. By putting all of his capital into a single company, he has built a net worth that now sits comfortably in the seven-figure range. His decision to concentrate rather than diversify may allow him to retire far earlier than most people his age. Palantir Technologies has been one of the top performing stocks in the technology sector. Its share price has risen by over 80%, driven by a combination of a growing interest in artificial intelligence, speculation tied to the political landscape, and a passionate base of retail investors who continue to support the stock. However, what makes Breton's story stand out is that he did not jump into Palantir recently. Instead, he started buying shares all the way back in the final months of 2020, not long after Palantir first began trading publicly. At the time, most investors were unsure about the company's long-term potential, and the stock struggled for years. Despite that, Breton remained committed and continued to increase his stake. According to brokerage statements obtained by Business Insider, Breton's total investment in Palantir now includes 17,800 shares, plus an additional 2,000 shares purchased through margin borrowing. This brings the total value of his investment to nearly $2,500,000. Remarkably, Palantir is the only stock in his portfolio. He has no bonds, no mutual funds, and no exchange-traded funds. His approach is highly unconventional, but it has clearly worked for him so far. Breton explained that he set out to find businesses that were not just above average, but truly extraordinary. He did not want to scatter his money across many different companies just to reduce volatility. 2 decades before this bold move, he had briefly tried investing in the stock market. However, after the market crash that followed the September 11th attacks, he became disillusioned and sold off his investments. That earlier exit kept him away from the stock market for years. His return came during the early days of the global pandemic, a time when market volatility was extremely high. Rather than follow the panic selling he saw around him, he chose to take a contrarian approach. When he witnessed someone selling off their entire portfolio during the crash, he decided to do the opposite and opened a new brokerage account. As he began to look for investment ideas, a YouTube video about Palantir caught his attention. He immediately found the company fascinating. Breton works as a technical specialist in the manufacturing industry, and he was drawn to Palantir's software because it addressed challenges he saw every day. Issues such as disconnected data systems and inefficient supply chains were common in his field, and Palantir's tools appeared capable of solving those problems. Motivated by both the company's mission and the potential of its software, he made a huge leap of faith. He sold off his real estate holdings and invested nearly all of his available funds into Palantir stock. At first, he started buying shares when they were priced at approximately $10 each. As the stock dropped to as low as $6 later that year, he continued buying more. He documented his purchases by writing them on the wall of his garage, keeping track of how much of his life savings had gone into the stock. By the middle of 2023, the share price had returned to $10, and at that point, he held 10,000 shares at an average price of $8.83. April of 2023 proved to be a major milestone for Palantir, as that was when the company officially launched its artificial intelligence platform. This marked a significant turning point. Palantir began to recover from its earlier struggles, and investor sentiment started to improve. What had once been a speculative bet now began to look like a strategic masterpiece. Over time, Palantir grew into one of the most talked about names in the technology sector, eventually being viewed as a rising giant in artificial intelligence. As Palantir's stock rebounded, Breton began to explore ways to generate income from his holdings. One strategy he employed was selling covered calls. He was clear about one important rule. He never used this strategy with his core holdings. Instead, he borrowed funds using margin, bought additional Palantir shares, and then sold covered call options using what is known as a ladder strategy. This involves spreading the call options across different strike prices and expiration dates, which allows for consistent cash flow from the premiums collected. The income generated from these option premiums has enabled Breton to keep growing his position in Palantir. Every time he receives a premium, he puts that money to work by acquiring more shares. He has developed a disciplined, repeatable process that maximizes both income and ownership in the company. Despite his confidence in Palantir, Breton is fully aware of the risks that come with having most of his net worth tied to one single stock. To reduce some of that risk, he has also begun using long-term equity anticipation securities. These are options options that expire more than 12 months into the future and offer a way to hedge large positions while maintaining upside exposure. In one example he shared, he sold a call option at $185, sold a put option at $130, and simultaneously purchased a protective put at $45. All three of these contracts are set to expire in December of 2027. This setup is known as a strangle with downside protection. If the stock price remains between $130 and $185 until expiration, both of the sold options expire worthless, and Breton keeps all of the premium income. If the stock price rises above $185, he would miss out on any additional gains above that level. If the stock drops significantly, the protective put ensures that he can sell his shares for no less than $45 each. This combination allows him to earn income while also safeguarding against major losses. Breton has no plans to sell his core Palantir shares anytime soon. However, he is open to the idea of investing in other opportunities using the money he earns from selling options. As of now, he is actively planning his retirement, which is likely to happen much sooner than he had ever imagined. Despite this, he is not in a hurry to leave the workforce altogether. He shared that he enjoys his current profession and has no desire to suddenly stop working. Instead, he plans to ease into retirement gradually. He's considering launching new business ventures and exploring fresh opportunities, but he wants to do it at his own pace. His story is a powerful reminder that with conviction, research, and patience, even a high-risk investment strategy can lead to life-changing outcomes. In the end, Etienne Breton, a 47-year-old investor, defied conventional investing wisdom by putting all of his money into one company, Palantir Technologies. After discovering Palantir through a YouTube video during the pandemic, he sold his real estate and began aggressively buying shares around $10 each, continuing even as prices dropped to $6. His position has now grown to nearly 20,000 shares, valued close to $2,500,000, as Palantir surged over 80% in 2025, fueled by artificial intelligence growth and political momentum. Breton used advanced option strategies like selling covered calls and buying long-term protective puts to generate income and manage risk. Despite the heavy concentration in one stock, he is planning an early retirement and may consider other investments in the future, though he still enjoys his career and wants to explore business opportunities on his own timeline. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.